What's up, trader? What's up, tycoon? Super excited for today's video. Lots to break down. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. There's some really good charts, some amazing data that I want to show you guys in today's video. So be sure to stay tuned through the whole video. I don't appreciate wasting my time. I take my time valuable and I treat your time valuable as well. So I'm not going to have any fluff in here or any BS. We're just going to get straight into it and show you guys some really impressive stuff and some things that I think you need to be paying attention to. So be sure to smash the like button, subscribe to the channel if you guys are new. I just started a brand new free newsletter. Okay, this is what the website looks like as of now. It's completely free. I'm putting out really great content and also giving trade ideas every single week. So if you're a fan of free trade ideas and free content that's actually valuable, this was a recent trade idea, SWK. This is Stanley Black & Decker. And this is what it looked like in the newsletter. And you can see we had this rising wedge, and I mentioned breaking below this level right here, 96.85. And you can see once we ended up breaking through that level, we had a strong push to the downside. And if you were able to enter put contracts, and let's say you got the 95 strike, those contracts went in the money, and that was a nice profitable trade. So there's a link in the description or a pinned comment down below, and you guys can feel free to support the channel by joining the newsletter. It's completely free, and you guys are going to enjoy it a lot. Trust me about that. Now, some of the things that we're going to look at, we're going to take a look at the AMD 1 hour chart. Now it appears we're getting a breakdown. Okay, as soon as we break this 107.27 level, it's very possible we tag our next targets here of 101.09, 96.38, and 93.44. Now there's a couple ways that you could look at this. On the 1 hour time frame, it looks like we're trying to get a 5-wave impulsive correction. Or rather a impulsive 5-wave down. All right, that would take us to about 96.38. And it's also very possible that when we zoom out to the larger time frames, we could be getting this ABC correction to 93.44. Right, but ultimately this is all a big opportunity I've been waiting on for AMD. If you missed a lot of the rally up here in this huge, really one directional move, it's very tough to want to chase these things and FOMO into them. And then as soon as you start to see these corrections, a lot of people will panic sell, right? Now, after we get this 5-wave up here, we'd be looking for an ABC correction to the downside. That's going to form our larger cup and handle, right? I've been looking and, really waiting for this cup and handle to develop after rejecting our previous levels, from the 2022, near the 2022, beginning of 2022, the highs there. We rejected that level here on AMD, and now we're starting to get our pullback. We have our Fibonacci levels here, and it makes sense that we get some type of a healthy pullback. And if we can hold above 93.44, even if we just trade sideways and don't go straight up, that's going to form the handle for us for potential larger move towards the end of 2023 or perhaps throughout 2024. We're also going to take a look at the SPY 1 hour chart, break down the SPY 1 hour. All right, we have some bullish divergence forming here on the MACD as well as the RSI. We have a bullish chart pattern known as an inverse head and shoulders. And it wouldn't surprise me after filling the gap down if we do get some type of a rally. There is a small gap up to fill right here. You can see on the SPY chart. So would it make sense for us to come back up and retag this before heading back down lower? Yeah, it could. And when we zoom out a little bit and we take a look at the daily time frame, it's definitely possible that the S&P 500 is due for more pain, right? As soon as we break through this 440 level here, it's really possible that this larger bump and run pattern right here takes us down to 430 or 420. And ultimately, the way a bump and run is supposed to work, you're really supposed to blow through this second trend line, and that could take the S&P as far down as 400. So nothing is guaranteed, but what we have to do is monitor the data we have in front of us and try to do our best to navigate the landscape. So we're going to do that in today's video. We're going to break down all of this technical analysis actually in the second half of the video. Before we go any further, I really have some important data that I want to show you guys. Now, this is relative to baby boomers and millennials. And we're going to talk about demographics a little bit, okay? So when you look at the income and expenditures by ages 35 to 54, this is when you produce more than you consume. Now, under 25 and over 75, that's when you start to consume more than you produce, right? So over 75, generally people are retired, not working, okay? And they're just consuming. They're not really producing anything for the economy. Whereas 35 to 54, these are your prime working years. This is where you have training and experience, and you have productive skills. And these productive skills are going to result in earnings, spendings. You're also going to have savings and investing happening, right? And this is where you're going to see the peak of that. So why is this relevant? Well, 2023 to 2034 is the prime time for the working age of 25 to 54. This is your millennial age group right here. All right. Now, again, why is this important? Well, if we take a look at when the baby boomers were in the 27 to 42 age range, which is where we're at right now, with the youngest millennials being 27 and the oldest being 42, the S&P 500 went on an additional 444% rally. Now, this is a monthly time frame chart, and that's in this box right here, roughly in the middle half of this chart. You can see boomers were 18 to 36 years old. Okay. And then right around here is when they're 27 to 54. Okay. And you can see that really the market tends to consolidate once your top earners hit this 54 range, right? And once they go out of those prime working years, right? And this is where you're producing more than you're consuming, this age 35 to 54. Okay. And you can see during that area and during that time frame, this is when the market started to cool off a little bit. Now, you see right here, the 18 to 36 with the boomers, this is when millennials were 18 to 33, all right? And we're in this time period now where millennials are going to be 27 to 42 years old, all right? And it's very possible that we could see something similar to what happened over here, where we still get an extended rally, an extended continuation in the market. That's definitely something that could be possible. And, you know, I just kind of wanted to go over some of the demographics and age side of thing, because it's pretty important, okay? When you take a look at this and you understand, you know, what age groups are really spending and investing the most in producing the most, it's very valuable for, you know, the age of millennials at the current time in the market. Now, what are some other things that could suggest that we're in a much larger term secular trend right now? Well, you can take a look at the vortex indicator, and this can be used to identify the start of a trend and subsequently affirm trend direction. All right. And so you're basically going to be looking at this green line here. And when you see it cross above, this is giving you confirmation that we're starting a new trend, right? And that's what we're getting here early in the market, is we're getting confirmation of a new bullish trend. So a lot of people, you know, will look at, you know, 1 hour charts, 5-minute charts, 4-hour daily charts, and things like that. And, you know, those can show you a little bit more of some bearish signals, maybe in the short term, maybe bullish signals in the short term. But when you zoom out and you start looking at these larger time frames, such as the monthly, you can see that it's very possible we're really about to start a much larger macro trend here, okay, and more of a secular trend that could lead us and really coincide with some of this demographic data, right? Now, when you take a look at the S&P 500 performance following the round trip in the vortex trend indicator, aka that basically that bullish crossover, the data is very impressive, right? You can see 1 year, 2 year, 3 years out of the time, it's all been green, except for in 1967 and 1971, all right? 3 years out, those were negative returns in the market. But everything else in this data set is completely bullish. So I do like those odds a lot. Those are very favorable probabilities. Now, another one that you can look at, right? This is going to be your Williams percentager. All right. And essentially what we're looking at is these bottoming signals here, 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 and here. You can see the market started a new bullish cycle. Remember, this is a monthly time frame. So when you see these bottoming signals and you see this rally, these are long extended periods of time, right? These aren't just a couple days. You can see it again over here. We start another rally here. We start another rally here. We start another rally over here as well. We start a very large rally over here. We start a new rally and we hit that level again. And we've already begun a new rally. So when you take a look and you see what we're getting now in the Williams percentage indicator, 1 year, 2 year, 3 years, 10 years, look very, very promising. Okay. The average returns 1 year out, 17%, 2 years out, 30%, 3 years out, 45%, and 10 years, 171%. So, you know, very, very favorable data and favorable, you know, probabilities right here going off of this indicator. Another one is going to be the special K indicator, right? Created by Martin Pring. It's a momentum indicator that combines short, intermediate, and long-term velocity into one complete series, thereby giving us true sum cyclicality. It has two functions. First, to identify primary trend reversals at a relatively early stage. And second, to use that information for timing short-term pro-trend price movements, right? And we're going to go over here and take a look at some of the returns. Once we see this rare special case setup, Again, the returns for the S&P 500 1 year out on average are 15%, 3 years out 45%, 5 years out 84%, 7 years out 109%, and 10 years out 176%. So, again, we're seeing the probabilities look very favorable based on some of these indicators and some of these rare signals that we're currently getting in today's market. Okay, so I really wanted to bring a lot of this to you guys' attention. We have another one here. We have our true strength index, the TSI right here. And we're looking at these larger time frames, the monthly time frame here. And when we see these bullish crossovers here, there's some very favorable returns as well, right? Once you get a rare round trip in the true strength index, your TSI, 1 year out average is 15%, 3 year is 35, 5 years out is 65, and 10 years out is 140%. So, a lot of this stuff can be overlooked by investors in the market, and there's always going to be someone screaming about, the next impending doom and the next global crash. But what you have to do is analyze the data you have in front of you and compare it to the historical data that you have available. All right, so here we are on the SPY 1 hour time frame. All right, and we're seeing a couple signs that it's very possible we could get a bounce, right? This does look like some controlled selling so far, right? We're seeing a little bit of a channel right here forming on the S&P 500. We haven't really seen that big capitulation. Right? Each time that the market has tried to capitulate, it's rebounded, and we've started consolidating. So it is very possible, right, that as I mentioned, we could get a little bit of a rally and potentially retest this trend line. This is an inverse bump and run pattern. You have your prevailing downtrend right here, and then you have the aggressive bump down in price. And if we break this, typically you would head towards the top trend line, and then you would get a breakout above that trend line as well. And that perfectly aligns up with this small gap up that we have to fill on the SPY 1 hour time frame. Now, on top of this bullish pattern that we have forming, okay, we also, as I mentioned, have some bullish divergence. So take a look how we have lows here, and then we have lows here. Well, on your RSI, we have lows here and we have higher lows here. So it's a very simple term known as bullish divergence. We're making lower lows on the price action, making higher lows on the RSI. Same thing here on the MACD. And if we were to zoom in on our MACD a little bit, you can see that it's trying to curl to the upside, right? You can do like this, and you can see this white line is trying to cross back up above the red line here. That could be a potential entry signal. So something to keep in mind and something to pay attention to in the short term. All right. And this is, again, a little bit more of a bullish scenario for the beginning of the week for the market. Now, if we were to zoom out to our daily time frame and get a bigger picture of things, it definitely seems like we're putting in a topping signal, right? And what do I mean by that? Well, just simply take a look at the rounded top that we have in the market, okay? We have a rounded top here. We see a nice aggressive sell-off. Rounded top here, nice aggressive sell-off. Rounded top here, nice aggressive sell-off. Rounded top here, nice aggressive sell-off. And we've got a rounded top here. Do we get another nice aggressive sell-off and potentially retest this trend line if we break through that 440 support level that I mentioned? Very, very possible. That's definitely a possibility. Now, what are some of the warning signs that you can use to spot this? Well, again, you can see here that we're making higher highs, and you look at your RSI, we're making lower highs. So we're seeing a divergence. We're seeing a divergence on the MACD as well. Remember, your RSI is your relative strength index. So it's going to measure the relative strength of a stock at its given price levels. And we're seeing that we're continuing to make these higher highs and getting this negative divergence here, making lower highs. A lot of people tend to misuse the relative strength index. Okay. One of the biggest mistakes that I see people making is essentially trying to buy every time it comes to oversold, okay, and essentially trying to short every time it comes to overbought. What it's telling you is if there's a lot of strength or if there's a lot of weakness. So, for instance, this is a really good example. If you were trying to, short this area here, yes, there was a short-term pullback, but you can see ultimately, if you were expecting this trend line right here to break, or you're expecting a larger move to the downside, you would have been stopped out of that position or been forced to sell because you can see that, there was so much strength in the market, actually continue to make new highs. And really, it's the second time that you start to approach those overbought or oversold conditions, when really you should start paying attention to it a little bit more, especially once you start to get those negative divergences in different things like that. So, in a typical, or rather in a perfect world scenario, this bump and run pattern, you have our prevailing uptrend, you have the bump up in price, right? The aggressive bump up, and this would take us and break us through this trend line and potentially send us, crashing down in the S&P 500. So lots of work to be done for that to happen. This is just a possible scenario we're going to pay attention to. And then we're going to look down into our smaller timeframes to see, where is the short-term price action taking us, and where is it telling us that it could go? Those are things that you don't want to ignore. Now, let's go ahead and take a look at AMD. All right, we'll take a look at AMD on our daily time frame here. Okay, and so AMD, I mentioned that we've been looking for this cup and handle to form, right? We have our previous highs here from early February of 2022, came up, rejected those in the middle of June of 2023, and we're starting to see a pullback. Now, from February to June is one giant cup, okay? This is definitely a bottoming, right? This definitely looks like a bottoming signal here, and we've seen the large rally. It makes a lot of sense for us to tag this prior supply and get this pullback. All right, we've had a nice 1, 2, 3, 4, 5 impulsive move to the upside, and we'd be looking for an ABC correction to the downside. This is on our daily time frame. Okay, it makes a lot of sense to get your correction and get your corrective wave after that impulsive 5-wave move. And when you take a look, that can bring AMD all the way down to 93.44 potentially. Now, if you break 93.44, that's when you need to be a little bit cautious, right? If you flip this area to resistance from support, then most likely what you're getting is a reversal versus the trend continuation, right? So you have the 5-wave uptrend, you have the healthy retracement, and then you get that trend continuation to the upside and break through your cup and handle neckline, which is going to be 133.13. If you end up flipping 93.44 to resistance from support, that's when most likely the retracement levels are being broken and you're going to see a reversal, right? Because that's essentially how you want to use the fibs. Nothing moves in a straight line down, nothing moves in a straight line up. You get to move up, retracement, continuation higher, or move down, retracement, continuation lower. Right. And so that's what we're looking for. Move up, retracement, continuation higher. But you can also use it to spot reversals. If you move up, retrace, consolidate, and break through those retracement levels, that's how you can spot a potential downside reversal. And that's something that we need to be cautious of as we're starting to consolidate through our retracement levels. If we break through 93.44 and flip that to resistance from support, it would make a lot of sense for us to actually, get a larger reversal on the daily time frame. Now, when you look at things on a smaller time frame, such as the 1 hour, right, it looks like we're setting up for a 5-wave move down to 96.38. Right, we have a pretty clear 5-wave structure right here. We have a 1 down, 2 up, 3 down, right, and then we got a wave 4 retracement. This level right here, 107.27, has been tested many times, right? Let's take a look. Okay, you can see 1, 2, 3, right? Then we have 4, and we have 5. And really the whole day here on Friday, we consolidated. So the more times you test the level, the weaker it's going to get. So unless, the S&P 500 gets that inverse bump and run pattern to really bring the market up higher, and we see AMD get a nice rally up higher, if we, continue testing this 107.27 level, it's very possible that we're going to get a breakdown of this and head down lower to 101.09. And ultimately, what's just happened here? And ultimately this 96.38 level. Okay, that's definitely where I can see it coming pretty soon, right? I mean, we have essentially an inverse cup and handle forming right here. Right, we have the inverse cup, and we're starting to consolidate here a little bit. Even if we were to bounce up a little bit, that would still be putting in our handle. And again, as soon as we break this 107.27 level, very possible we see a sharp move to the downside. Now, that's essentially it for today's video. Hopefully you guys enjoyed it. If you did, smash that like button, subscribe to the channel. And if you enjoyed the analysis in today's video, don't forget to sign up for my free newsletter. All right, I'm giving out trade ideas every single week, as well as other valuable, just general investment knowledge and things that I'm looking at in the market. And you can always get a personal training or personal coaching session with me. You can email me, zachleytrades@gmail.com, and we can work on scheduling a time together. I do these coaching sessions every single week. And, if you enjoyed it, we can go over some of the, different techniques that I use, maybe help you guys set up some indicators that I use, maybe help you guys, chart up some of the stocks that you guys are looking at, and get my personal opinion on, some of the key levels, some of the different patterns, some of the different structures that are forming at the moment.